Welcome to the Capital News. I'm your host, Alex Karitis. Today is a Sunday, September 27th, 2020. Thank you so much for joining me. The title of today's podcast is More Free Stuff. I was off on Thursday and Friday, as I had said that I might be. I wanted to make sure I did a podcast this evening to make sure that we went over last Thursday's data figures with respect to initial jobless claims, Federal Reserve's balance sheet, money stock, some conversation between the Republicans and the Democrats for some more free stuff. Could be another $2.5 trillion, $1.5 trillion. What number are they going to pick? They're just going to pick it out of a hat. I told you more stuff was coming. They might put it off for a little bit longer. Hell, they might wait until somebody is elected president again. There is going to be more spending above and beyond what we normally do. And what we normally do is not normal. It is not sustainable. So, you can play your charades. You can play your political games. I never flinched. The markets are going haywire. Some people think, oh, well, there's no doubt that there's going to be more spending. And then, of course, the recent passing of Justice Ruth Bader Ginsburg. Now there's political fighting, more so than normal. There's no way they're going to get back together and get something going here. The stock market kept making all-time highs. There's no reason to get together and do more spending because everything's obviously working so great. Nope, not here. Never flinched for a second. They are going to spend more money that we simply do not have. So, initial claims we'll get to. We'll do a little bit more analysis on the free stuff that's coming down the pike, some market performance, and then just some of the volatility that is likely going to be experienced between now and the end of the year. So, some light market performance. We have the dollar index trading at 94.5. This has been, again, a huge rally in the dollar index over the past week. Again, getting very close to that 95 handle where we have not been since back in July, August. So we have seen a lot of volatility in the dollar index over the past several months. There's been massive sell-offs when the market sold off, a huge counter rally in the month of April, another massive sell-off, some consolidation, another big sell-off, some more consolidation, followed by another big sell-off, consolidation over the past few months, and now this rally. We are going to find out how long-lived it is going to be, because if we come across that dollar doom loop scenario, this is not going to bode well, especially for the rest of the globe. And it's probably not going to have any type of stimulative effect on the stock market here in the U.S. as well. So it's something to monitor closely because of all of those reasons. The Federal Reserve does not like this. They put out their dollar swap line several months ago to counteract this. Huge amount of U.S. dollar-denominated debt circulating around the world. It is coming due. It is due. And you need dollars to pay it off. So that creates demand for dollars. Because a lot of others are arguing that this is some sort of flight to safety, viewing the U.S. dollar as a safe haven asset. But if that was the case, one would also think that we would see Uncle Sam's 10-year Treasury junk note going down as well with respect to the yield. Well, that's not the case. The yield has been range-bound. It has not moved, okay? And, of course, the MOVE, M-O-V-E index, is the volatility index of the bond market. You have the VIX for the stock market, the S&P 500. You have the MOVE index, which gauges and monitors the volatility with respect to the bond market. Well, we talked about this last week as well, I believe, and how it was getting close to hitting an all-time low, which the previous all-time low took place earlier this year. Well, the MOVE index just hit an all-time low, taking out that low which was experienced a few months ago. I chalk this up to being the calm before the storm. Now, why is there very low volatility in the bond market? Well, that's because the Federal Reserve is doing its best to expand their balance sheet, to buy U.S. debt, to control the yield curve. Now, some people think, they make the argument with this yield curve control. Well, that might be what the Federal Reserve comes out and announces next. Announces next, that's what they've been doing. What do you think they're doing when they're buying bonds across the curve? Bonds, notes, bills, what have you. They are attempting to control the yield curve. This is laughable that they come up and say, well, what are they going to announce next? They're already doing it. But we know they're out of ammunition. They have been out of ammunition. They are trapped. They are not going to tell us the truth. They're just going to keep that Banana Republic printing press on full bore. They're not going to stop. And as we've seen time and time again over the past several weeks, Jerome Powell, the chairman of the Federal Reserve, has come out continuously in conjunction with other members of the Federal Reserve, because they've been out in full force over the past couple of weeks. Congress has to do more. Congress has to do more. Well, why are they chiming in? Aren't they supposed to be independent? Of course, they're not independent. They're working hand in glove with the Treasury Department. And of course, Mnuchin's out there. Yeah, Congress has to do more too. I thought we were in this miraculous super V-shaped recovery. So why do we need more free stuff? It's a head scratcher, isn't it? Unless, of course, you understand what's really going on here, that we are in the midst of the greatest depression. This is just getting started. The several $1 trillion of free stuff that they threw into the system did absolutely nothing but kick the can further down the road. And now several $1 trillion has already been exhausted with nothing to show for it. And these idiots are back up there before Congress, in front of the cameras, saying we need more free stuff. And the Fed's saying, well, the way we really got to do it so we can have some cover is for the Congress to do more stuff so we can finance it. We have to finance it because we don't have the money. So then maybe we shouldn't be doing it. But that never seems to be an option. I mean, hey, the president last week or a week and a half ago, I can't remember how quick time goes anymore. The president said in one of his press conferences, the Republicans can get on board with this. What difference does it make? Go for the big one. Because it's all coming back to us anyway. Yeah, it's going to come back to us in inflation. Stagflation. Maybe even hyperinflation. So nobody wants to do any type of cost-benefit analysis on this. Nobody wants to ask the basic question, how much is all this free stuff going to cost us? It's free. So it doesn't cost us anything. Well, then why do we have to pay taxes, and why are you paying your bills? Send them to the Treasury Department. Send them to the White House. Send them to Mitch. Send them to Nancy. Send them to the Federal Reserve. So that's the dollar trading at 94.5. Futures trading, got the Dow Jones Industrial Average up about 0.25%. The S&P 500 is up about 0.33%. The NASDAQ 100 is in the same range. The cash trade in Japan is up about 0.2%. The cash trade in Australia is flat at the time of the podcast. On the commodity front, we have crude oil, WTI at $40 even, Brent at $41.67, natural gas at $2.12. Gold and silver, we're going to see what gold and silver does over the next couple of weeks with all of this volatility. Gold is at $1,861 an ounce. Silver is at $22.82. As far as I'm concerned, any pullback is a buying opportunity. And as we stated earlier, 0.66% Uncle Sam's 10-year junk note. So that's some of the market performance. More free stuff, of course, is American Airlines tapping the government again for another loan of $5.5 billion, something like that. I mean, how many more are going to be coming to the trough? And again, the federal government doesn't have the authority to lend money. It has the authority to tax and spend. It doesn't have the authority to lend. But, hey, who cares about the Constitution, right? Who cares? Everybody is paying everybody off for votes. Okay, you got Mike Bloomberg down there in Florida running around with the shenanigans of paying off fines for felons. so that they can go and vote. But then, of course, you also have the President of the United States signing executive orders extending unemployment benefits, cutting the payroll tax, at least temporarily. He doesn't have the authority to do that. That resides with Congress. Oh, but don't worry. It's Republicans. It's okay. As long as we can't appoint to the courts strict constitutionalists, well, then everything's fine. But the president can get away with it. He's not buying votes. Just Mike Bloomberg is. This system is collapsing, ladies and gentlemen. This is the two-party system in action, in your face. And most of you are going to go and vote for it, for this to continue in perpetuity. It's in your face. I don't know what you're paying attention to. Jobless claims for the week ending September 19th, 870,000. This was higher than market expectations. For the week prior, ending September 12th, they were revised higher by several thousand. Actually, it was 6,000. 866,000 was the number for September 12th, revised higher by 6,000. And again, initial claims for the week ending September 19th, 870,000. Well, still below 1 million, but still heartbreaking that 870,000 Americans have filed initial jobless claims. Continuing claims for the week ending September 12th, this lags 12,580,000, a decrease from the prior week of 167,000. All together, for the week ending September 5th, again, persons claiming unemployment insurance benefits in all programs. So that takes into consideration your regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency UC, unemployment compensation, extended benefits, state additional benefits, work share, gives us a grand total of 26 million in change. This is a decrease from the week prior, which would have been August 29th, of 3.7 million. Now, this becomes a head scratcher to me because this is not jiving with a lot of the other reports and a lot of the other data that we have been seeing over the past several weeks. Now, of course, this lags, again, week ending September 5th, but still over the prior couple of weeks, we have seen a market increase for that grand total of all persons claiming some form of unemployment insurance. Now, I hope that this is the case because I hope 3.7 million Americans were able to find work that can pay the bills. However, I'm not so certain about this. There have even been some reports circulating out there with the Department of Labor, with this report, that there is some counting issue going on here. And of course, we know from the official jobs report that there have been some issues there as well. So this is a little bit of a head scratcher because most of the decrease week over week took place with respect to the Pandemic Unemployment Assistance Program, which was a child of the Nobody Cares Act. And that was a decrease of 2.9 million, almost 3 million right there alone. Regular state unemployment, week over week change, was a decrease of 910,000. And then with respect to the pandemic emergency unemployment compensation, which was also another child of the Nobody Cares Act, saw an increase of about 104,000. So the bulk, again, of this week-over-week decrease was in the pandemic unemployment assistance. Now, these are your gig workers, your small businesses, what have you. Now, there were also reports out last week that the state of California was going to try to slow down the processing of initial claims because they can't handle the volume. I mean, it's going to be backlogged. I mean, those jobs are lost. The state of California is just not processing them. And of course, we know that there are thousands, if not hundreds of thousands, if not millions, I hope that's not the case, but hundreds of thousands at least of Americans who have still yet to receive unemployment benefits. But the airlines can get bailed out at the drop of a hat. They can even go through their first line of bailout and come back to the trough and get another loan. No questions asked. Here you go. Another $5.5 billion. And there's more waiting in the kitty if you need it. So do what you got to do. And we're only a few short days away from the end of the month already here in September, which of course is the end of the third quarter, if you can believe it. Which means that initial bailout that the government structured with the airlines is expired. And we have had several airlines come out and announce that if they are not back to normal, or some semblance of normal, by the end of September, beginning of October, that they're going to be laying off tens of thousands of employees in aggregate. I don't know if that was an attempt by the airline industry to perhaps extort the federal government, meaning you and me, to give them more assistance. I don't know. I don't know, but at least American Airlines is getting several $billion more. Now, it's a loan. It's a loan, so I guess the government will justify it and say, well, we're going to get paid back, plus interest. Oh, fantastic. Fantastic. I wonder if any of us will get the dividend check. I doubt it. So that's the game that's being played. I just hope you understand this. So, again, this is a head-scratcher to me. Still distortionary effects going on. This does not jive with the various small business surveys that we have been looking at here. This does not jive with the various household surveys that we have been going through over the past several weeks. So somebody's not shooting straight here. Somebody's not shooting straight. And this, unfortunately, does not surprise me, because I have stated it here every week when we do these Thursday episodes, whether it's on a Thursday usually or right now on a Sunday when we talk about this data nonetheless. It's very difficult to get both hands around the jobs picture because there are so many distortionary effects. It's also a political year. So the numbers got to look good. And this Friday is going to be the first Friday of October, so we're going to get the official jobs report. And this is going to be the last official jobs report before the presidential election on Tuesday, November 3rd. Now, we'll continue to get initial jobless claims figures, but if it's something like these shenanigans, well, who knows what it's going to mean. But still, 870,000 Americans filed for initial jobless claims last week. And this is supposed to be some sort of miraculous Super V recovery. I think not. We haven't even gotten to the evictions. We haven't even gotten to the bulk of the bankruptcies and insolvencies. We haven't even gotten to the bulk of the commercial real estate collapse. We haven't even gotten to the bulk of a lot of other defaults with respect to household debt, whether that's automobiles, whether that's credit cards, what have you. These moratoriums are there for rent, for mortgages, for student loans. I mean, how much longer are we going to continue this? Right? I mean, what's the plan? Have any of you heard the plan from the President of the United States as to how he's going to handle all of this? No. Have any of you heard the plan from Joe Biden on how he's going to handle all of this? No. No. You think Build Back Better, Make America Great Again, you think that's it? You need slogans? You think that's going to solve this? You think buying American is going to solve this? I mean, what's Joe Biden getting up there for? Oh, yeah, Build Back Better, buy American. The government buys, $600 billion worth of stuff, $600 billion worth of stuff. We're going to spend that times 3 or 4 at the drop of a hat over the course of the next few months. Once these idiots get together, and of course I mean the Republicans and Democrats. The Democrats are at $2.4 trillion. The White House is at $1.5 trillion. Oh, gee, I wonder where they're going to meet. Does the president want to play hardball, or does he want to go big with the 2.4? My guess is it's probably going to be somewhere around 1.9. That's my guess, is where they're going to end up meeting in the middle. I think Thunder Thumbs wants to have a 1 as the front digit. He doesn't want to see 2. I think 1 is good. They can pass it off. Even if it's 1.99, they're still going to say it's 1.9. So that's what they're going to call it. And I think that's what they're probably going to do. at some point in not too distant future here. We'll find out. So that's that. Federal Reserve's balance sheet. Let's bring this up. $7.093 trillion. This is an increase over the prior week of about $30 billion. We are getting closer to making a new all-time high. We had an all-time high back in the month of June at $7.168 trillion. So at the current pace of week-over-week increases, we can be there by the end of October. So that's the Federal Reserve's balance sheet. No surprise there. And of course, they want to take it much, much higher, and chances are they're going to. With respect to M2 money stock, we are at another all-time high, $18.7 trillion. These numbers, I mean, it's hard to even wrap your head around them, but nonetheless, making an all-time high. This would be for the week ending September 14th. The prior week, which would have been September 7th, was at $18.576 trillion. So that's an increase of about $125 billion thrown into the system over the past week. And we don't have much to show for it, do we? We really don't have that much to show for it. The dollar was rallying. The stock market was selling off for the most part. Not too much to show for it. So is this really starting to paint the picture that the Federal Reserve is out of ammunition, and the only way there's really going to be any other type of boost to the system is if Congress gets their act together? This is their thinking. Okay, this is not mine. This is their thinking. That Congress has to get their act together to spend more money that we don't have. Now, Wall Street, the crack addicts, are going to love it. That's what they've been waiting for. I mean, that could be in part why the market has been selling off, because there has been more bets that, well, Congress isn't going to get together to do more spending. So what does this actually tell us if you just take a step back, take a deep breath? Oh, wait a minute. There's not going to be more funny money thrown into the system? So that means the stock market is going to sell off? So what does that tell you, ladies and gentlemen? That this market is completely rigged. It's complete fakery. It needs the funny money. And if it needs the funny money to stand up, well, my God, we don't have a market, do we? We don't have a market. And here's another little interesting tidbit here, too. You know, the circuit breakers, we saw this several times on a nightly basis when the market was really selling off back in March. We saw the market hitting limit down on overnight trading several times. That was about 5%. Well, they are changing that parameter. It's no longer at 5%. It's now at 7%. It's a head scratcher, isn't it? This is going to be implemented on October 12th. On October 12th. The limits are going to be increased. And of course, it goes both ways. Up and down. But typically, when you see volatility, it's to the downside. So again, this is October 12th. The limit parameters in the S&P 500 are going to be increased. Now, why would they do that? Because there's going to be a lot of volatility over the next month, at least through October, because of the election. We have no idea what's going to happen. We're going to have our first debate on Tuesday between Tweedledee and Tweedledum. Who knows what's going to happen? Again, I'm still reserving my analysis for the Electoral College. We'll do that probably on Wednesday in continuation there through. So there's going to be volatility. 7%. That's huge. That's huge. That's a few hundred points as it stands right now on the S&P 500. That's just something to be mindful of. Because again, when markets get volatile, it usually means they're going to the downside. And you have to understand, too, if this is a bear market now, if we have reached our peak, of course, time will tell, big money, some of the biggest money is made during bear markets. And if you pay attention to what's been going on daily with the markets, a lot of the trading action takes place overnight. It's the pajama traders. And then what happens at the opening bell, it just, okay, it opens where it was overnight, and that's it. It's range bound pretty much throughout the entire day until sort of the last 30 minutes, the last 15 minutes, the last 10 minutes of the trading session. And then it goes back into the overnights, and there you go. Rinse, repeat. It's been the same song and dance for the past several months. So this is what more free stuff gets you. It gets you markets that are completely out of control. It gets you markets where you witness a lumber price that goes to the stratosphere and then collapses 33% in one day. In one day. This is what gets you. This is what all this free stuff gets you with the price of oil going negative $40 a few months ago. Negative $40 a barrel. And now it's at positive $40 a barrel. This is what this gets you. Gold and silver prices dropping into basically a correction or a bear market with respect to silver in the course of a week. This is what all this free stuff gets you. All of this volatility for nothing. All of this uncertainty for nothing. And on top of it, it ain't free. You're paying for it. Your kids are paying for it. Your grandkids are paying for it. Generations that aren't even here are going to be paying for this. Because we're not done. I mean, think about it. We're at about $27 trillion with the national debt. If they throw on another $2 trillion out of nowhere because they think they got to do something, well, there you go. There's $29 trillion just like that. Because we don't have the money. We don't have the money. Yet the Democrats will vote for this. The Republicans will get in line too. Make no mistake about it, because that's what they've done. That's what they do. 96-0. No votes for America. That was the Nobody Cares Act. Okay? They will do it again. And Thunder Thumbs will, with a huge smile on his face, sign it into law. Because they don't care about debts and deficits. So, if they don't care, then maybe we shouldn't care either. Send them your bills. Send them your tax payment too. You pay it. This is what I owe. This is what my accountant says I owe. You pay it. These are my bills for my internet, my car, my phone, Send them to them. Debts and deficits don't matter. What's good for the goose is good for the gander. You pay my bills. Now, if you did that, I bet you'd have a problem. But wouldn't that be an interesting experiment? Because they can hand out the free stuff to whoever they want. But it's typically not you. It's not the people. And we know when we follow the money, because that's what we do here, we know where the bulk of it goes. We know how big a wedge this is creating between the various brackets of the income scale. And we know through a historical perspective what that means socially, politically, and economically. And none of it is good. That's the protests, that's the riots, that's the chaos. This is what free stuff costs, ladies and gentlemen, and I hope I make that crystal clear. And this comes to you via the two-party system, which you must leave. You must leave them because they have left you a long time ago. Do not fall for the buzzwords. Do not fall for the circus act that they put on. That's what they want you to fall for, so that they can get away doing all of this stuff again and again and again and again. And their logic is right. Hell, if we can convince the people and just, throw a few words out there and put on a circus act for them, and they're going to continue to vote for us, well, that's their problem. That's their problem, men. And there's some logic to that. And that's what they do. And that's why nothing's getting better. That's why it's getting worse. And as bad as 2020 has been economically and all these other problems, all we've done is glossed over them with funny money for the past several months. Now we're going to have to pay for it because it ain't free. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Corritis. Godspeed.